Hello, welcome to another session of Principles of Accounting. Today we will discuss fixed asset. Fixed asset is one of the topics that we are covering this week, and it's located in chapter 10. Let's dive right into it. Fixed asset, also called planned asset, by definition is tangible in nature. Fixed asset, you can feel them, see them, touch them. They have a physical presence in your operation. You actively use fixed asset or planned asset to generate revenue. And fixed asset are expected to benefit future periods. So it's not just you purchase the asset, you pay for it, and you take the cost to your P&L and expense it uh, in the same period. Because they expect to benefit future periods, you allocate the cost over the useful life of the asset. That's where depreciation comes in, depreciation which we cover in a different presentation. Fixed asset is also called plant, PP&E, property, plant, and equipment. What is the cost of the asset? How do you determine the cost of the plant asset? Well, the cost of the plant asset includes the purchase price, what you pay for it, but also all other expenditures that are needed to prepare the asset for its intended use. If you have to pay sales tax, if you have to pay insurance while the asset is in transit, if you have to pay programming costs, if you have to pay uh, testing costs, all of these are included in the cost of the asset, and that's the cost you will be using when you calculate the depreciation. Let's take, for instance, machinery and equipment. What would be included in the acquisition cost? Of course, the purchase price, what you pay for it, the sales tax, transportation charges, insurance while the asset is in transit to your place of business, the price of installing the fixed asset, the equipment, putting it together, assembling, and also testing. All of these costs are included in the cost of the asset. Again, that's the cost you are going to use when you calculate the depreciation using the three methods we talked about previously. Okay, and building, for instance, you what would be included? Well, the cost of purchase if you purchase the building, or the cost of construction if you building it, if you are building the facility yourself. Title fees, okay, attorney's fees, brokerage fees, taxes, all of those are included in the cost of building. Again, the cost of the building, which include all of those, will be used to calculate the depreciation. What is land improvement? Well, land improvement is any change or addition that you make to a piece of land that would increase its value, usefulness, or its appearance. If you have to redo a parking lot, you have to improve a driveway, a fence, you have to uh, uh, construct a walkways or install a lighting system to the land. All of those are considered land improvement. And you would depreciate the cost of these improvements over their useful life, just as you would depreciate the cost of purchasing a building or a piece of equipment. Okay, what is included in the cost of land? Of course, the purchase price, all right, the purchase price, property taxes, surveying fees, legal fees, real estate commissions, all of these costs are included in the cost of land. But we've been talking about how we include all of these costs in the cost of the asset and we use that cost to depreciate the asset. Well, it's worth noting here that land is not depreciated. Per accounting convention, land is supposed to live in your books forever. You do not depreciate land. You depreciate building, equipment, vehicles, all fixed assets depreciate except land. All right. So this is it for fixed asset. If you have any questions, again, please do not hesitate to reach out. Send me a text, email, or send me a CTU message. I will see you in the next class. Bye.